Good evening, everyone. I just want to share another quick video. We're going to be doing a lot of short videos moving forward on the charts rather than YouTube. YouTube, when I'm explaining information in depth, then I'll put a video up for everyone to watch, which will be like 30 minutes long. So yesterday we spoke about buying and selling areas. Okay, we sell at a high price and buy at a low price. So this would be our sell area that we marked yesterday as resistance, as I explained, and your resistance will then be like your roof, and then this will be your buy area, which will be your support area. So when the market is revisiting a buying area, that is where we buy, and when it's revisiting a selling area, that is where we sell. So it's very easy, we just wait for the market footprints. Okay, so why I'm making this video, we need to further understand what happens when the market trades above or below these areas. That is where we start forming market structure. So today we're going to focus on the buying market structure. As we know that price will then start off with a buy rally to the upside until it starts reversing its direction back to the downside, where we would take our first entry as confirmation that there was buys previously on this area. So we then move on to the upside, targeting the previous highs where the market once sold. So should then the market start selling, we then term this as respect, meaning that it's respecting this area. It's doing what we're expecting the market to do. So not only us, but everybody who's trading this currency pair would be expecting a sell, and that's when mass psychology is applied. So then the market will then start pushing back down, should it respect the area and do that, and then comes back and then respects this zone as well, as there was buying activity where we entered, and then we go for a second round. Now say the market doesn't respect this area and buyers aggressively push price above this selling area. Now this is what we're learning today, which is new. We will then wait for the market to trade above this and create a new high. Remember, when the market is creating new highs, it is bullish, it's creating new higher prices. So we then wait for it to then breathe in. Remember that it has to impulsively go up, and then when it breathes in, or when it pulls back, that's the word we use, it must pull back to the resistance area. So it comes back down here where it's previously broke these prices to create a new higher price, and this new high price is now the new selling area, and this new low price which we broke above is the new buying area. So we're gonna stop here. All right, when we are now learning in depth about new prices being created and new key levels being created. So when the market is respecting support, as we know that this is where the market buys, goes up, comes back to buy, to respect, goes back up, finds a selling area where it's previously sold, to respect and come back. So it's respecting this key level and it's acting as the support structure. As soon as it breaks above or goes above these prices, this selling area now is no more considered as the resistance area. It is now turned into the new support area, where we're going to now be looking for new buys, because this is the new low price. So we then go further up until the market starts selling, as we see. Then we're going to mark this area here as the new selling price, and we're going to mark this area here as the new buying price. So now we know that we're in a bullish market because we've just created new high prices. So as soon as the market then starts pulling back down, as we know that this is our new selling area, we've created a new higher price, and now we then move back down to the new low price, and that's when we can wait. Since we've entered our trade here, we wait to see now if the market respects this area and treats it as a new buying area. Should it then do that, which I'll show you examples of how price moves on candles, should it now do that, we're expecting to maybe respect again here, and then it comes back down just to pick up now sellers that can confirm that it once bought here and went back up to sell back where we marked as the new sell area. We're expecting it to come back and take us back for the trade to the upside. Then when we go above this new sell area and create a new selling area here, which I'm just going to turn, this is now our new resistance, and since we broke above this, we need to wait for the market to see if it reacts to this area and push up, and then we know that okay, we can start buying. This is now the new high price and this is now the new low price, so it creates lower highs and higher highs. Now as we go back, we're going in depth now, a bit lower. Now we want to put key zones and show you how the market will be trading. These areas I will mark, they're already available because they are footprints. We're using historical data to track the market's movements, so it's even easier when you're trading on live environments. But this is for you to understand the market structure of a buying market or a bullish market. So it will go impulsive, which is the push up, find selling areas where it starts selling, revisits buying areas, which is our support, and then creates a new high price by breaking this resistance area, and then this becomes the new high price. This will then become the new buying area, which is the new support, and that's the new resistance at the top. So where we buy is support, where we sell is resistance. When we break resistance, the resistance that we break above becomes support, but the market must confirm that. So when we break above, we're creating a new high price. We're waiting for the market to pull back. We're only buying the pullback. So whenever it pulls back, the market is allowing us to come and test these areas for buys, and then we break above, and then we take it the trade in the pullback. So this is where we mark structure. My apologies. These are the structures here and then here. Okay, and then we mark another structure here. I'm going to teach you guys how to use the system as well, so you're going to be fast and just get used to it. I hope that you've downloaded these two systems because it's important. All right, so basically I marked these areas. I want to change my colors now, just a moment, to red. Okay, so we know that this is where we buy, this is where we sell, this is where we buy. When we break above the area where we were selling, will turn into our new buying area, and then we start to increase in price. We wait for the market to start selling. As soon as it starts reversing, say it reverses here, this is the new selling area, and because we went above this becomes the new buying area to confirm that we're in a trending buying market, and it will just keep moving like this in price continuously. And then now we would want to only look for buys on the lows. So this is a buying zone. All right, that's another buying zone, that's another buying zone. Okay, and then that's another buying zone as well. Okay, only the pullbacks, we're buying the pullbacks of the market. So when we're looking at it again, just to see market structure, we're going to start off with changing the color, which is going to make this red. Remove. Then I want you to move with the trend itself. Okay, and we're going to make that, we'll create a narrative. The buyers will push price to create a high and revisit the low. we're buying in the low, and the buyers will break the high and create a new high price. The high that was previously broken becomes the new low price, or the new lower high, and this is the higher high. Then when we start pulling back to revisit the area that we broke, or to revisit the lower high, we then going to enter a buy, or the market will basically show us a little bit of a pattern here, which I'm going to teach you at double bottom for entry purposes and or confirmation that we're going to buy, and then it's going to continue up to find a new higher price. And should we break this and create a new higher price, this now becomes the new lower price, and then so forth. We just keep moving in it up and down, up and down. It doesn't change as much. Okay, so keep in mind that this is how the market will be moving. Okay, my apologies. It's just going to be moving up and down, and so forth. Okay, I'm just going to stop here, and then I'll put another one up.